Hi, this is Lara at Elliott Wave Gold with a video update for you for the trading session dated Thursday 12th of November. I'm doing a video because I have a new alternate wave count and it's reasonably well supported by regular technical analysis. If we see a new low below 1074.27 in the next 24 hours, that would indicate we're looking at a strong fifth wave down unfolding. The target is 937 to 932. In the next 24 hours, a new high above 1094.27 would indicate that we've got a multi-day correction, and the most likely target for that is 1118. I'd expect it to last either a Fibonacci 5 or 8 days, most likely at this early stage, if it arrives. So here's the main wave count, and this is the same as we've been using up till now. It's expecting that cycle wave A is incomplete. All of the previous bull wave counts have now been invalidated by downwards movement. Gold has been in a bear market since September 2011. We have zero confirmation of a technical change from bear to bull, and this is the only wave count that remains valid. One by one, all the bull wave counts were invalidated. Gold is still within primary wave 5 of a 5-wave impulse down for a cycle degree A wave. Primary 5 is unfolding as an impulse, and within it, its third wave at intermediate degree must be an impulse. It's begun with a couple of big overlapping first and second waves. Minor waves 1 and 2 are off to the left of the chart, and now within minor 3 we have minute 1 and a very time-consuming, very deep minute wave 2, and this is where minute 3 begins. If minute wave 3 is unfolding as labelled here, and we have 1, 2, 3, 4 within it complete, then we're in the final fifth wave down. This wave count expects minuet 5 to be a very long and very strong extension. Minute 3 still has to show an increase in downward momentum beyond that seen for minute wave 1. We haven't seen that yet, so for both wave counts still, strongest downwards movement is still ahead. If the degree of labelling here is correct, then we have a short little first wave, a deep expanded flat for a second wave, a third wave extension, a fourth wave very shallow combination, and the fifth wave is underway. At 937, the fifth wave would be very long and extended. It would be 1.618 the length of the third wave. That's fairly close to 932, where minute wave 3 would reach 1.618 the length of minute wave 1. If the fifth wave has begun here, then within it no second wave correction can move beyond its start above 1094.27. Let's look at this at the hourly chart level with the third wave low. The combination provides some alternation and structure with the expanded flat of the second wave. We have a zigzag, a quick zigzag for an X wave, and a 335 flat correction for the Y wave. This pace of the upward movement here doesn't have as good a fit on the hourly chart as the new alternate does, and that's one reason why I would slightly favour the alternate. If we've got the fourth wave over here, then we've got a fifth wave underway. We may have a leading contracting diagonal for a first wave, followed by a 335 expanded flat correction for a second wave, and prices finding resistance around about the midline of that channel, which I'm copying over from the daily chart. It's drawn in exactly the same way on both of these charts. There's another problem with the wave count here. Submicro wave B is over 2.8 times the length of submicro A. That's a lot longer than the maximum common length of 1.38 and longer than the Elliott wave convention of 2 times the length of the A wave. I have seen expanded flats with B waves this long before. It can happen, and there is no Elliott wave rule which states a maximum limit for a B wave within a flat. The subdivisions all fit quite nicely, and so this is entirely possible. If micro 2 continues sideways as a double flat or double combination, it can't move beyond the start of 1 above 1094.27. Let's have a look at the alternate. At the daily chart level, it's absolutely identical to the main wave count right up to this point here, and now I've moved everything here down 1 degree. What if we're looking at another first and second wave? What if we haven't got past the middle of the third wave yet, and it's still yet to come? Momentum would indicate that's entirely possible. We haven't seen an increase in downward momentum beyond that seen for this first wave yet. This wave count's a little bit different at the hourly chart level. We'll get to that in a moment. If we have another first wave correction complete, then we could be looking for a multi-day correction for a second wave, maybe to last a Fibonacci 5 or possibly 8 days, and it might be more brief and shallow than second wave corrections normally are because of the strong downward pull from the middle of a third wave at 3 wave degrees. Minuet 2 may only end about the 0.382 Fibonacci ratio at 1118. It may find resistance at the upper edge of this blue base channel, which is copied over from the weekly chart, drawn around minor waves 1 and 2. We found some resistance here, a bit here, and around about here, so we may very well find resistance again at that trend line. That might be enough to force it to end at the 0.382 ratio. If it doesn't end there though, the 0.618 ratio would be the next expectation, about 1145, and this would be the final line of resistance. If it turns out to be deep and long lasting, it shouldn't breach this final bear market trend line. A breach of that trend line would tell us that the market has changed from bear to bull. Minuet 2 can't move beyond the start of 1 above 1191.66. Let's have a look at the differences at the hourly chart level, where 3 ends down here, and up to this point all the subdivisions are the same with the exception of the degree of labelling. After that, this wave count differs. What if this fourth wave was over here as a really shallow zigzag? There's actually better alternation between the zigzag and the expanded flat of the second wave. And so this maybe has a slightly better probability there, but it is very brief. If we have the fourth wave over here, the fifth wave could be complete as an ending expanding diagonal, and now we're seeing this as a zigzag for a fourth wave within a diagonal. And so this piece of movement has a better fit, and we don't have the problem with that long B wave in an expanded flat that the main wave count has for this piece of movement. So some problems are resolved, and this is perhaps slightly better supported by regular technical analysis. If price manages to remain above 1074.22 and moves above 1094.27, then this alternate would be confirmed. At that stage, I would expect that we're in the early stages of a multi-day correction against and still a downward trend. So this is a correction against a trend, which is expected. The targets are the 0.382 or 0.618 ratio. In this instance, I would favour the 0.382 Fibonacci ratio. The invalidation point is the same as at the daily chart level. The channel is also the same as at the daily chart level. Let's have a look at some regular technical analysis. I'm slightly, perhaps, almost wanting to favour that alternate because RSI is oversold, and the last time RSI managed to reach oversold, we had a multi-week correction. I wouldn't expect this next correction to be that time-consuming or that deep. That was remarkably and surprisingly time-consuming and deep. This is a lower degree second wave correction if that's what's going to unfold, and so it shouldn't last as long as a second wave correction 1 degree higher. It might find resistance at this horizontal trend line. We have this fall in price clearly supported by rising volume. Again, these 2 days, a fall in price supported by rising volume. And so the trend is definitely down, and it's nicely supported by volume. ADX still tells us there's a downwards trend in place, but if we're about to move into a correction, ADX is a lagging indicator. It won't tell us. And so we look at ATR as well. ATR is declining, and that's another small cause for concern for the main wave count, which slightly perhaps better supports the alternate. If the range that price is moving in is declining, yet we're moving toward the middle of a strong downward piece of movement, the range really should be expanding, not declining, and so that indicates perhaps a correction should arrive. With RSI oversold, a correction about this stage could resolve that. Stochastics is giving us just a little bit of bullish divergence again today. As price has made a slight new low, stochastics has turned upward again. Overall, as price is making these new lows for these few days, and so that would slightly favour the alternate. I will take that seriously, but price really should tell us which one is correct in the next 24 hours. And that's all for me today with your gold analysis. I hope that all of our members are having a fabulous day.